Hey guys, Joe Baker. Want to go over what took place in today's market, and we'll find out what we have coming. Now, remember, we have a jobs report tomorrow. Okay, this could be a game changer. I do believe that you never know, but we could have priced this in. Okay, being that we've had the largest 2 point decline since '87. I think a little bit of the bad news might be priced in at this point, and maybe some type of a feeble relief rally may be upon us. But let me just go over the structure again, as I've been doing these continually. I'm going to, I guess, for lack of a better word, beat this into you guys till you get an understanding, okay, of letting the market talk to you. Now, here's our open range, okay? Here's our average on the open, 15 high, 15-minute high, 15-minute low, and then we have the first hour high and the first hour low. Okay, so your first hour low is here at 9:31 and 9:51. So we have a nice 20-point range, which is a pretty good range, guys. 20 points on the first hour. So what happened? This is the midpoint pivot. This shows midpoint of day. Okay, so we remained under the midpoint almost from say 9:50 on. And when I said in last night's video, let the market talk to you. Okay, that means you just sit back, look at your screen, and say, are you making lower lows or higher lows, higher highs? You know, what are you doing? And this is where it comes in. Now we've got obviously a lower, obviously it does help us because we do have visual aids, okay? Meaning these little indicators that say lower low, lower low, lower low, lower high, lower high, lower high, lower low, lower high, lower low, lower high, lower low, lower low. Okay? Didn't mean to be repetitive, but where in this trend did it say buy? Okay? Now, if you wanted to scalp from this point here to this point here, by all means do it. But where was the true opportunity was to sell every lower high was the better opportunity. Okay? Yes, you could have done these, but this puts you in the pattern of buying. Okay? So what I'm trying to say is stick with the trend, all right, until it reverses. Now, we broke through this trend line. We rallied up to this area here, about the 916 level. Came down, and the first time the entire day we had a higher low right at 230. Okay? Provided a pretty good opportunity. You had about a 15 or 16 point run there. Okay? Many of you remember back that used to be an entire day's range. 16 points used to be what we would get every day, not 60. All right. So, I mean, at some point we have to understand this volatility is pretty incredible, and it most likely will diminish at some point. Who knows when? But you understand you made a higher high. You're looking for a higher low here. This setup, okay, a little bit of a inverse head and shoulders. I'll draw it right here. Okay, and the reason why is because I have something setting up on the daily, which I did mention that. And yes, it is still in effect. I'm going to give it a little bit of room. I'm not going to be too mean to the market right now. And there you go. Okay, so here's your little head and shoulders pattern, inverse, and then bang, you failed to take out this low, and this was your buy point. Okay, now could you have caught this, with momentum indicators and being able to read price? Who knows? With the way the market's choppy, sometimes your best bet is to catch one or two good trades in these types of markets and then just get out, because I feel sometimes the longer you stay in, the more myopic you might get on a short-term time frame, and it could be damaging. So just please trade careful. This is, again, I've said this 1,000 times. This is no time to be a cowboy and start throwing around size and trying to catch every move, the ranges are giving you more than enough. You have to remember back, if many guys are been futures traders as long as I have, the 10, 12 point range days is what we used to get years ago, and not even years ago, not even that long ago. And a 5 or 6 point move was rewarding. So, now we're getting, 60, 50, 60 point range days, which is absolutely astonishing, even at the level we're at. So, I just want to just don't blow up, and just try to exercise extreme caution in these markets. Discipline and money management. Without those two elements in your trading plan, there's no way you're going to be successful. Okay, there's absolutely no way. So if you want to be successful, you just have to let the market talk to you. Understand market structure throughout the day, meaning watch a 15-minute opening, 5-minute average of that, your first hour high, your first hour low, and where are we in relation to that, and have we made higher highs, lower lows, higher lows, higher highs. Okay, just let the market talk to you. Now I'm going to go back and give you an update on this inverse head and shoulders that I said I would. Just hold 1 second. And here we are. Well, I was hoping the 912 would hold, okay, but I'm going to give it down. If you see this long clearing candle here, and we actually double bottomed at 897 right from this level, and this is the Globex session now, and we're heading up a little bit here. We're going to hold this area. Obviously, we need to get a bounce from here, and we got this jobs report, like I said, which could be priced into the market. I'm not really sure. Obviously, this is a fairly dangerous area, because if it does break, these areas, it could drain right down, and we don't know what's going to happen on this jobs report. But just be careful. A feeble bounce could be in the works for Friday, based on the jobs report. I think that's going to be the game changer, and I think that's going to be what will tell what this market wants to do. But just watch the volume today on the upside. If we go up on extremely light volume, we will tend to probably roll over next week. I know there's some news of some hedge fund redemptions, which is always hitting the news at this point. So there's if markets even shouldn't be sold off, they're having to be sold off. So it's like the end of the day trade. Like I always say, you don't want to be trading towards the end of the day, because 60 to 70% of the contracts are getting out based on just time of day, not based on technical patterns or setups. So why would you want to try to quantitate that into a technical pattern? So I always say, like the 3 o'clock time to 4 o'clock time, you have to be extremely cautious trading into that bewitching hour. It's almost like a new opening. Okay, so people are getting in trades on the open based on the need of just wanting to be in the trade. Same thing at the end of the day. People are just having to get out, and you're having to trade against that. So just be careful trading the 3 to 4 o'clock time frame. Moral of that story. And be careful on these markets altogether. I don't have to tell you that, but there are a lot of redemptions coming in, and things are being sold that shouldn't be, is what I'm saying. And markets are being taken down to levels, or even individual stocks are taken down to levels they shouldn't be as well. All right, guys, I will talk to you on Sunday night.